Your bank may be stealing from you. Wells Fargo was recently ordered to pay $3.7 billion because they were illegally charging fees and interest on auto loans and mortgages. And then on top of that, they had unlawful surprise overdraft fees on a lot of customers' savings and checking accounts. Now, this penalty was brought on by the Consumer Financial Protection Bureau, which is in charge of looking over these major banks and look over the different activities and if they're doing illegal practices like Wells Fargo was doing. Now, out of the $3.7 billion fee, $2 billion would go back to customers, and then there's just a $1.7 billion fee because of their unlawful doings. And so once again, in this world where we have capitalism and greed and all of these things, not saying that capitalism is wrong, but we have people at the top using their position to take money from customers, from consumers, from the middle class, from the low class, in order to fill their pockets even more. And so what impact does this have on the economy as a whole, especially on this channel where we talk about the housing market? So how does this affect the housing market, or how did it affect the housing market, especially during this time when people were looking for mortgages and looking for ways to lessen their mortgage? And then you have these banks on top of what the Fed is doing, charging these illegal fees and mortgage rates upon people who can't really afford them. So in today's video, we're going to talk about what exactly happened to Wells Fargo, because this has been an ongoing issue over the past couple of years for this mega bank. And then we're going to talk about what impact does it have on the housing market. Then we're going to finish off with what you can do to better protect yourself. Be sure to like this video, comment down below your thoughts on this new case, and make sure you subscribe to this channel for content around the economy as a whole. So what exactly happened with Wells Bank? Well, I don't know if this is just unique to Wells Bank, or are other big banks doing this also? Or is it just that Wells Bank can't really, or Wells Fargo can't really hide their illegal activities better than these big banks? Because I bet like illegal practices, unlawful things are happening across the board, but for some reason Wells Fargo is just caught in the middle of this. So this dated back to 2016, where they were found guilty for opening millions of illegal accounts in order to reach sales goal to make their shareholders happy. Over the past couple of years, Wells Fargo has been trying to clean up their act, paying billions of dollars to the government because of their illegal practices. And over the past 6 to 7 years, they've even been changing up their executive team, going over 4 presidents over the past 4 years. The Federal Reserve even put a limitation to how much more Wells Fargo can grow until they can put their practices under control. They put a $1.95 trillion cap on their assets until further notice, until they can clean up their act and make sure and just prove that they are a reputable banking company for consumers. So talking about some of the things they did, they illegally charged fees and interest on auto and home loans, which made people lose their homes and their cars being unlawfully repossessed. And then on top of that, for their checking and savings account, maybe they would get an overdraft fee, and you're all like, what is this overdraft fee on my account when I didn't take out more money than what's actually in my bank account? That's why it's important, you all, to check your checking account, check your credit card statements every single month. Make sure there's no weird charges. Make sure you contact your bank as soon as possible. But this is what's going on in Wells Fargo Bank. And it's just crazy to think that banks can get away with this, and they've been getting away with it for so many years. And I was reading the comments online about this very story, and people were just saying, never use Wells Fargo. I'm done with Wells Fargo. This happened to me with my auto loan, or this happened to me with my home loan, and different scenarios like that. And so you really have to watch over your account, make sure your banking account is secure. So talking about these illegal practices on the housing market, one thing that Wells Fargo did was unlawfully denied loan modifications on their mortgages. And so let's say someone lost 50% of their income and they can no longer qualify for a specific loan because they can no longer make payments on these loans. And let's say they've been making payments for like 10, 15 years, but all of a sudden emergency happens. And usually when you go to the bank, you can make a modification. But Wells Fargo was illegally denying so many of these applications, or maybe people just want to refinance maybe early 2021 when interest rates were in the 2%. Wells Fargo was illegally denying them or just adding so much extra fees on the refinance that it didn't make sense for a consumer to go forward with that. Or the consumer can no longer pay their payments, and so they lost their house to foreclosure. And can you imagine that happening when we already have a housing market crisis, right? People are looking for houses, the demand is still relatively high, and our supply is short. And then you have big banks that actually quote unquote want the housing market to do well, right? And everything, but yet they're denying people for certain type of modifications on their loan, or just making it hard and difficult for people to actually own properties. Maybe it's because banks themselves want to own the property eventually and rent them out to people, right? They want to be the owners. Maybe there's something to that. Now, there's no stats, that's not a factual statement, but I'm just throwing out what I was hearing of the sentiment of people talking about this story, saying on the comments online. But that could be a possibility. Wells Fargo's also unlawfully froze accounts. And so their algorithm or whatever technology they were using to detect fraud, where they're just making payments and they're living in the same neighborhood and all of a sudden their accounts get frozen and the bank says, oh, we detected fraud, but no fraud actually happened. And it may take a couple of days, a couple of weeks, but in Wells Fargo's position and situation, for people getting their accounts back live, it would take a couple of months until they got their money back. And so it's all like, wow, this bank has my money. I have no control over my money. And this was happening widespread across Wells Fargo. Now I want to talk about the executive team. So the executive team, in response to the settlement charge that they know they're going to pay, and they let their investors know that, hey, this amount is coming out of our bank account, so you're going to see a loss in this department. This is what they stated. They said that we have made significant progress over the last 3 years and are a different company today. We remain committed to doing the right thing for our customers and working closely with our regulators and others to deal appropriately with any issues that arise. This far-reaching agreement is an important milestone in our work to transform the operating practices at Wells Fargo and to put these issues behind us. And so essentially what this CEO is saying that, okay, yeah, we admitted we haven't been the best at making sure, we did things the right way. Maybe they didn't have everything under control with the different managers and executives, or the technology that they were using to detect certain things or to qualify or unqualify people. Just talking about that, it just reminds me of 2008, 2007, 2006, when these mortgage lenders were unlawfully giving people mortgages that they knew weren't qualified for. But now Wells Fargo is doing something similar where they're not giving out mortgages, or they're just doing things unlawfully with the mortgage applications, with loan modifications and things of that nature. And so you see the play of the bank and its control with people getting houses. And when you see that happening, the economy is going down. That there are issues here at hand that will lead us to a deeper and steeper recession. The Consumer Financial Protection Bureau, Mr. Chopra, recently stated that Wells Fargo rinse and repeat cycle of violating the law has harmed millions of American families. The CFPB is now ordering Wells Fargo to refund billions of dollars to consumers across the country. And then on top of that, I was reading that a lot of officials were stating that some of these acts, some of these illegal practices were happening this year. And so you have the CEO saying, oh yeah, we're putting this all behind us. This is for things that we did in the past. But these officials are saying, well, some of these things are still happening even in this year of 2022. So when you have the housing market currently in a crisis right now, and you have people having issues with affordability, with higher food prices, gas prices, energy cost, house prices, car prices, and then on top of that, you learn of this, like a big bank, a place where you trust to put your money in, and then on top of using that money to buy a bunch of things that are overly inflated, you have these banks charging you extra fees. denying you modification for things because the economy is shifting. And so it's just a double whammy on the consumer and the customers. And I think this is a better step in letting the big banks be charged for all these illegal practices that they're doing. And yeah, once again, I don't know if this is specific to Wells Fargo. Well, this story is specific to Wells Fargo, but I can guarantee you that this is probably happening across all the giant banking services and companies in America. But I think as consumers, one thing that we could do, I think if you're just a regular consumer, you're not like a billionaire or multimillionaire, I think you should highly consider using banks in your region, like regional banks or credit unions, because a lot of times they can be more down to earth, just more protective of your different things, and you can work more with them on a personal level than these big banks. But you also have to check your P's. You have to make sure that whatever bank you're going with, you have to do your checks and balances, right? You have to make sure that, okay, I'm getting, if I know I overdrafted, okay, this is the fee, okay, boom. And you gotta make sure, okay, let me go online, make sure how much the overdraft fee is. Okay, it's $65, but I was charged $95. Why is that? Or just making sure that your interest payments and your loans and everything looks good. Recently, I bought a home, and those mortgage papers can be a little bit daunting, but I'm glad I'm in the real estate market. I was able to read them through, and like on one occasion, I was getting charged like an extra $1,500, and I was like, what in the world is this extra charge? And if I never said anything, they would have charged me. And so it's like, even though this was like a more local style loan place, they were still charging me extra. And so I'm glad I caught that. And so I just recommend you all to do that in your day-to-day business with your banking services or whoever you go to for loans. All right, you all, hope you all enjoyed this video. Let me know what you all think down below of this new story. Be sure to like, comment down below, and I'll talk to you all later.